In the next 5 years, data center space is going to give huge opportunities for building wealth for long term. Have a look at this and you see that in the month of October 2025, Adani and Google announced their partnership and they're going to build India's largest data center, which is going to cost them around 15 billion US dollars. And that's going to be ready by, let's say, 2030. Just 1 month after this announcement came Reliance's announcement that they have also created a JV partner and they are going to launch their second data center that is going to be in AP and they're going to spend around $11 billion. This is the second data center that Reliance has announced in the last 12 months or so. And it's not just about Adani's and Ambani's. Have a look at this data point where Amazon, Microsoft and Google together have pledged a combined investment of around $67 billion in India since October 2025. And if I were to break this down, Microsoft is saying $17.5 billion. Amazon, $35 billion, a company that I'll speak about in this particular video in quite a detail. And then finally, Google that has committed around $15 billion of investments in data center. Now, if you're wondering why these big companies are investing in India, have a look at this screen here. And this is talking about India's Draft National Data Center Policy 2025. This is going to be a game changer policy if this gets implemented. Why? Because as per the draft policy, they are talking about giving 20-year conditional tax holiday for data centers. I mean, a country where in India we are paying income tax of around 30% and whatnot, and corporate tax of more than 20%. All of a sudden, if there is a policy that says that for 20 years there is a tax holiday for data centers, guess what? It's going to invite a lot of investment in India's data center ecosystem. So if you're an investor that is looking at a portfolio for 2030, then data center sector should find some space in your portfolio, in my view. And in this video, I'm going to talk about a couple of stocks and couple of ETFs that you can go and study and explore. I'll share my study and my research with you, totally unbiased, so that you learn about what's happening in data center space and you're not going to find this content anywhere on YouTube. If you don't know me, my name is Rahul Jain. I'm a full-time investor, a content creator, and a SEBI registered research analyst. I do my independent research and I share it on this channel in English. I also have started a Hindi channel. The love and the support I'm getting on my Hindi channel is phenomenal. अगर आप मुझे हिंदी में सुनना चाहते हैं, तो go and subscribe to that channel. Otherwise, continue here in the English, and I'm going to talk about now 2 stocks and 2 ETFs in data center theme. The first company that I'm going to discuss is Anant Raj. I talked about this company around 4 months back on my channel, but there are a lot of updates in this particular company when it comes to data center space. So just a quick overview, this company operates into real estate. So they build residential businesses, luxury housing projects, affordable housing projects, so on and so forth. But they also have their annuity business and one of them is data center. Now let me give you a view on their data center business in terms of where it is, how much growth they are seeing and what are likely to be the profitability from data center space. But before that, if you look at this company's overall growth rate in the last 5 years, if you look at the fundamentals, revenues growing at around 69% CAGR, EBITDA profitability measure, that is growing at around 76% CAGR basis. PAT is growing at around 149% CAGR basis. These are some real numbers. These are not in future. These are past performances. If you look at the last couple of quarters in 2025, then if you look at the revenues grown at around 198%, EBITDA 259% and PAT around 359%. Phenomenal growth is what we are seeing in fundamentals. Now coming to their data center business, which is what I want to talk about. If you look at the first half of FY26, they did around 58 crores of revenue from data center. And if you look at the total revenues, they were around 1223 crores. So if you do some maths, around 5% of their revenues came from data centers. This was the first time they started to get some revenues coming from data center stream. Now the question comes, Rahul, what is the profitability of this 5% revenue that the data centers are generating? Is their data center business profitable? So what their management said is that the EBITDA of data center segment is around 75% and the PAT is around 43%. So very, very healthy profitability is what their data center work stream is giving. But the question comes, it's only what? 52 crores, 58 crores, which is only 5% of their business. Well, here is what the data that you need to know, that by FY27, they are projecting that the data center segment is going to give them around 1200 crores of revenue. This is what their projection is. I don't know whether they will be able to fulfill it or not. Of course, there is always a risk when the management is projecting such a huge number, but that's what the reality is, that the management is saying 1200 crores of revenue from data center by FY27. Okay, Rahul, understood. How much of data center capacity they have right now? So as of now, they have around 28 megawatt, Now, why data center capacity is in megawatt? I've explained all of that in my first video on data center, this video. Please go and watch that video. You are going to learn some basics of data centers in that particular video. In fact, I covered Anant Raj there. Also, one another company that I talked about in that particular video. Go and watch that video. You're going to learn a lot. But coming back, 28 megawatt of operational data center capacity. And just to break it down, they have 3 data centers. One is Manesar near Gurgaon, Panchkula, I think it's in Punjab or Haryana, whichever state, and then Rai. This is near Sonipat. These 3 data centers are being built right now, and these 3 are operational as of now. If I talk about the future growth prospect of data center, they're talking about by 2030 around 307 megawatt of capacity. And just to put this in some context, Reliance and Adani's and Google's, they are talking about 1 gigawatt. Here they are talking about 307 megawatts. So by 2030, it's going to be almost 1/3 of Adani's and Google's. That's the sort of scale that this company is operating at. But very, very recently, just 30 days back, they also announced investment of 4,500 crores in data center facility in Andhra Pradesh. I feel like everybody is going to Andhra Pradesh now. Google and Adani announced their data center in Andhra Pradesh. Reliance also announced in Andhra Pradesh, and now this company as well moving to Andhra Pradesh. I don't know what AP guys are doing, but they are pulling some good investment into their state, which is very, very good for them. So overall, if you ask me, their data center theme is likely to do well in the next 4 to 5 years. Of course, in the short term, prices may fluctuate. A lot of risks might come into the picture. But if you're looking for long-term investments, go and study this company. There is a lot of information that I have not covered. Please go and explore that as well. Now, from shareholders or investors perspective, couple of things that you need to know. In the month of October, they did a QIP, qualified institutional placement, around 1100 crores. And they had set up around 662 per share as the price for that. And which companies invested in that? You can see the good companies here, Morgan Stanley, Jupiter India, Kotak Mahindra, all of these had a share from that QIP. And the floor price was 662 per share. Also, very recently, in the month of December 2025, the promoters bought the company's stake back at around 507 per share. These are some of the points that will allow you to look at this company from a holistic perspective. I've talked about fundamentals, I've talked about QIP, I've given you a lot of information. Please go and explore this company. By no means don't take this company as a recommendation here. Why? Because there are a lot of risks. What are the risks here in this company? For example, all of a sudden, let's say in US, data center theme, AI theme comes crashing. What's going to happen to Indian real estate or data center stocks? They are also going to feel that pressure, definitely. All of a sudden, let's say a Chinese company comes out in the market and says that we have the best data centers or the best AI technology, then US might come under pressure, India might come under pressure. Those are some risks that are inherent in data center. Therefore, if you want to get into data center space, don't look at this as a short-term trade opportunity. Only look at 2030 and make sure you have a strong heart. With that, let's now move to our second company, that is Amazon. Look, if you're discussing about data centers and AI, and if you're not talking about companies like Amazon and Google, then your discussion is incomplete in my view. There are few things that you need to know about Amazon that nobody is talking about. First of all, have a look at this data and you will see that in August 2025, Amazon announced that we're going to spend around $100 billion in data centers. And that is more than the GDP of many countries. Now, one of the problems with Amazon that shareholders have witnessed is that in the last 5 years, the stock have not really made them wealthy because it's gone up by only around 41% in the last 5 years cumulatively. That's not a growth you expect from a company like Amazon if you're a shareholder of this company. Now you will say that, Rahul, maybe it's that the company is not giving growth in their fundamentals. Maybe that's why the shareholders are not very, very happy. Well, that's not the case. If you look at the last 5 years revenue, grown at around 14% of CAGR. From a profitability perspective, look at EBITDA, 26% annual growth rate in the last 5 years. Net income, which is profitability, 34%. So from a growth perspective, you can see these numbers in the last 5 years. So why the shareholders have not been very happy? Maybe because the valuations 5 years back were very, very high and the fundamentals were behind the valuations. And that might have been the problem when it comes to the shareholder returns. Now, let me walk you through something very, very interesting about Amazon. What you see on my screen is their net sales, and you will note that it's been very, very flat in the last 4 quarters. It's just the Q3, which is the October ending 2025. They have done pretty well. Around 13% year-on-year growth is what we have seen. That is a very, very good quarter from Amazon's history perspective. But more importantly, if you look at where their revenues are coming from, North America, the green pie chart you see here, which is 59%, right? International, like for example, India and many other countries, 23%. And AWS, which is where their data center business sits, is at around 18%. But if I talk about this AWS section here, what you will know is that, have a look at this data, and you will see that AWS of Amazon is the highest cloud infrastructure market share company at 29%, followed by Azure, Microsoft's. Google Cloud is far behind, and Oracle and others are far behind. So AWS is number one when it comes to cloud infrastructure. I'll speak about AWS in a minute, why there is likely to be a good growth in their AWS business, which also in-house the data center business. But before that, if you look at the profitability of Amazon, Q3 of 2025 has been very good, 38% year-on-year increase in their profitability. We have not seen this kind of growth in their profitability in the last, I would say, 2 to 3 years. But one of the big concerns that investors have around Amazon is the free cash flow. Have a look at this data point and you will note that the free cash flow has been coming down. What is free cash flow? Simply, if you look at the operational cash flow and if you remove all the investments, you come to free cash flow. What is happening here is that the operational cash flow is strong, but they're investing a lot. And that's why the free cash flow is coming down. It's down around 69%. If I show you the breakdown of this from an investment perspective, see the purchase of properties and equipment, etc. And you will note that it has been steadily going up. And that's why their free cash flow is coming down. Investors sometimes get really worried in terms of why this company is putting so much of money in investments. Are they going to get the return back or not from that investment? Sometimes that spooks investors out, and that might be playing out with Amazon right now. Because have a look at this picture here. Amazon has announced now $125 billion of capex in 2025. This is huge, and they've raised this multiple times. One of the investment that they're doing is in this chip called Trainium. I'm going to play a little clip from this video so that you get to understand what this Trainium's capabilities are.
Last week, Amazon didn't just announce a new chip. They dropped a bomb on the entire AI industry.
Now from this video, you saw what the capabilities of Trainium could be in the future. And more importantly, if you see the growth of AWS business that Amazon has, is being driven by Trainium. 150% of quarterly revenue growth is coming from Trainium. This is mind-boggling. This could be a game changer in my view. Now, technology like Trainium needs huge investments, and this is also a kind of a risk or a caution where investors say that, is this gamble? They are calling it gamble in terms of a lot of money companies putting in. Is this gamble going to give them returns or not? And we don't know, you don't know, I don't know. Again, it really is in future. But if you are bullish about data center theme, if you're bullish about AI, then you need to know that Amazon is pumping a lot of money, more money than likes of Google's and Meta's. My last point on Amazon before I shut up. And if you look at the valuations here, PE, if you look trailing 12 month around 32, and if you look at the forward PE around 32. If you look at EV multiples here, trailing 12 month is around 18 and forward is around 15. If you look at price to book 6.72 and forward is 6.46. Why have I shared this data? Whenever you're picking any company from data center AI theme, you can compare. You can do some comparison and see where the valuations are, and whichever company is giving you higher growth prospects and the valuations are lower comparatively or relatively, then that becomes an opportunity for you. Again, I've shared a lot of information about Amazon. Please go and study Google, for example. Go and study Meta, for example, and look at some comparative valuations. If you want me to do some comparison for you, let me know in the comments. That create a video only on comparing, let's say, Amazon, Google, Meta, the top 5 or 7. I'll be happy to come back. But again, I need to know whether you guys are interested in that sort of content or not. With that, so far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me a lot to bring you such content at zero cost. Also, you can consider joining my YouTube community because almost on a daily basis, I post exclusive content for my community and they gain a ton of knowledge. Feedback of that community has been excellent. Simply go to my channel, find the join button and be my guest. With that, let me speak about an ETF because a lot of people ask me, Rahul, are there any ETFs for data center theme? So in India, there are no ETFs that I could find for data center themes, but in US market, there are a couple of ETFs that you need to learn about. First of them, I've logged into my vested account and what you see is Global Data Center and Digital Infrastructure ETF. This one is backed by Mirai Assets, right? We all know Mirai Assets. Now, I'm not going to talk about the returns of this particular ETF because you get heavily influenced by returns. You don't really look at where this ETF is operating, what is the benchmark. So let me cover those important aspects first. What you see is that if you read about this particular ETF here, you will note that they are investing in securities of Selective Data Center REITs and Digital Infrastructure Index. Now, there is an index called Selective Data Center REITs. So if I show you that index, it's here on my screen. This is a German index. And if I talk about this particular index's composition here, so if I come down here and talk about index composition, you will see that it's tracking companies like, for example, AMD. American Tower Corporation, Applied Digital Corporation, very good data center company, ARM Holdings, Broadcom, China Tower, Crown Castle Inc. Many of these good companies it's tracking. Now coming back to this particular ETF here, if you look at this ETF's total assets around $732 million, expense ratio 0.5%, volumes is quite good, 480,000. And if you look at this company's breakdown, IT 50%, real estate 46%, communication services 3.35%. Why 46% in real estate? Because data centers, there are a lot of companies, especially the REITs. Now, what are the REITs? You all know these are real estate investment trusts. Again, I can talk about REITs on a separate topic, Indian REITs, US REITs. There is a lot of content out there about REITs. But in plain simple English, REITs are the trusts that invest in real estate properties and they give you dividends as shareholders. And of course, there is a capital appreciation. And it's suitable for those people who do not invest in properties, lump sum big money. They want to buy small ticket items like REITs. Now, if I look at this ETF, their largest holdings are some of the REITs. For example, Equinix, this company is a REIT. And in fact, this is world's largest REIT. In real estate, 10.82% allocation. Next is Digital Realty Trust. This is also a REIT, 9.69% allocation to REITs. The reason I'm talking about this allocation here is that Warren Buffett personally does not like REIT. If you go to YouTube and just do a search that Warren Buffett's view on REIT, you will find a video where Warren and Charlie both talked about why they don't prefer REITs, mainly because they say that there is some funny accounting going on in REITs. They don't understand this. That's their view. And I wanted you to be aware of that view because I'm not really telling that you invest in this particular ETF or not. I really want you to understand the perspective on this particular ETF that it invests in REITs. And there are people, there are big investors who like REITs. There are investors who do not like REITs. It's up to you to make that decision. But as of now, this is one ETF out there and you can see the returns as well, right? Again, past returns do not guarantee future returns. But this company is picking up on those particular stocks and REITs that are operating in the data center theme. The index that they are tracking it is Selective Data Center REIT. Just Google out, you will find a lot of information about this particular ETF and you understand your options by reading this out. The second ETF that I found in data center theme is in front of your screen, which is iShares Trust iShare US Digital Infrastructure and Real Estate ETF. Again, if you go to your vested account or any other demat account which is giving you US exposure, you'll simply Google this particular one, which is IDGT, and you'll find it. Previous one was DTCR. This one is IDGT is the ticker, right? Go simply and explore yourself. But let me quickly give you some overview of this particular ETF as well. This ETF is also investing in data center, telecom, towers, and related equipment sort of companies. Which index it is following? So if I show you, this is the index, S&P Data Center Tower REIT and Communication Equipment Index. Again, please Google it. You're going to get this to page and you can read about this particular index. You can look at the past returns as well. Coming back to this particular ETF here, if I talk about, for example, look at the total assets around $137 million. 0.41% is the expense ratio. Volume is low here, 6.43K versus the previous one that we saw. If I talk about the sectoral breakdown, IT 54%, real estate 45%, and so on and so forth. Again, very, very similar pattern I found in the holdings. Equinix is around 10%. American Tower Corp here is 9.9%. Digital Realty Trust here is at third at 9.7%. Two of these are REITs, Equinix and Digital Realty Trust. These are very, very large REITs, and you can see other holdings here as well. In terms of returns, again, past returns do not guarantee future returns, so you can look at them or ignore them. It's up to you. I've talked about this second ETF here. Please go and explore it. I'm not saying that invest in these particular ETFs. In fact, let me now speak about the risk associated with the data center theme, because I've talked about a lot of positive things in the data center space. Let me now give you 3 to 4 risks so that you understand totally unbiased commentary about data centers. Number one risk is electric power concerns. So we all know data centers use huge electricity, right? And of course, this is not good for environment because you have to produce so much of electricity and there is some compromise to the environment. And tomorrow, what happens if the regulatory concerns kicks in and they say that no, data centers can't use so much of electricity, the growth cannot be this much, don't do this, don't do that. Some sort of regulatory tightening, if that happens, then data centers might land into trouble. That is one risk. Second is the interest rate sensitivity. So we all know that data centers need huge infrastructure in terms of the land, building and physical space. And there is a lot of investment required particularly in the REITs business, and therefore if the interest rates move up and down, that could cause impact in terms of the financing of these REITs. So that's a second risk that data center theme actually is right now seeing, and in fact a lot of discussion going around interest rates. Third one is technology and competition risk. What happens tomorrow all of a sudden a company from China or from US or from any other geography wakes up and say that we have got the best AI, or we have got this particular chip coming in the market? All of a sudden, what happens is the stock or ETFs that you might have taken the bet into might see a sharp correction or a crash in fact. That risk always remain in data center theme. And number 4 is specific to ETFs. If you look at the ETFs that I talked about, almost 50% of their portfolio is into few companies, 5 or 7 companies, and therefore these are quite high concentrated risk. So in my view, if you want to play out data center theme, don't look at short term. First of all, don't look at is a swing trade or trading opportunity. Look at it from a long term perspective. You need to have a stronger heart if you want to play out this theme. And of course, you have to do thorough research. I've given you some direction here in terms of going and reading a lot about data centers. And if you like that theme, then you make your investment opportunities. That is your call, not my call. Please do not take any of the stocks or ETFs I've talked about as a recommendation. Hopefully you've gained some knowledge. Hopefully you've gained some perspective. And if you did, like the video, subscribe to this channel so that you can constantly upgrade yourself when it comes to your knowledge. I'm going to see you in my next video. Until then, keep rocking.